All right, welcome to the second session of this course. Now we'll be looking at understanding candlestick. Candlestick are trader best friend. Okay, I want to understand this point before we go into the practicals. Candlestick are trader best friend. They provide a wealth of information about price action in a virtual, appealing, and easy to understand format. Each candlestick represents a specific time period. It could be a minute, an hour, a day, or even longer, depending on the time frame you are trading. The body of the candle shows the opening and the close price for that period. If the closing price is higher than the opening price, the body is typically colored green or white. Now, I want you to know something. The color, you can actually change the color from your MT trader or from trading view. Okay, you can change the color to any color you want. Okay, but for the sake of this course, okay, we are going with what is on the screen, but just note that the color can be changed. Okay, if the closing price is lower, it is usually red or black. The wick or shadows extending from the body shows the highest and lowest price reached during that period. But candlesticks are more than just pretty picture. They tell a story about the battle between buyers and sellers in the market. Long bodies indicate strong buying or selling pressure, while short bodies suggest indecision. Long wick can signify potential reversal. Now we're going to look at a few candlesticks you should stick to make trading decision. Okay, use them for entry, use them for exit, use them for many things in the market. Okay, so you don't need to start cramming all the candlestick. You just need to stick to some few. So we're going to talk about those few. But before then, I just want to explain what is on the screen virtually. I want to explain it practically. Okay, I want to explain it practically so that it can be clearer. Now, if you look at your screen, this is an example of a candlestick. Okay, now open means that the candlestick open from this level. We're going to look at it on the chart. Okay, the candlestick open from this level and close at this level. Now, if the candlestick close below where it opens, is a bearish candle. Now, this is how you know bearish and bullish candle. Okay, not just by the color. Many traders only focus on the color. Whenever they see a green candle, they'll call it a bullish candle. Please, the color is not the most important thing, because there are sometimes you will see a red candle and it will be signifying a bullish movement depending on where it's being formed. This is why I say that we need to understand the principle behind candlestick. It's possible to see a red candle and yet it's giving you a bullish signal, but it's red. That is why we need to understand the principle. You need to understand where a candlestick is being found. Have different message. Okay, let me put it this way. If you see this candle on your screen on a support level, it has a different message when you see it on a resistance level. It communicates a total different message, even though it is the same candle. We'll go into it in detail, but I just want to understand the concept. The way to know a bearish candle is when a candle closes below where it opens. That is the example you are seeing on your screen. Okay, that is the concept of the bearish candle. Now, if you can see this high, what this high is telling you is that there was a time this body, this is the body of the candle, this is the body of the candle. This week is telling you that there was a time this candlestick get to this level, but later came down to this level and went down and even got to this level and later closed at this level. Now, the highest price the market got to in that time period, whether it's a 1 hour time frame, whether it's a daily time frame, no matter the time frame, but the highest price at that particular time frame, that is the high, and that is being represented by wick. Now, wick are very important in trading, very, very important. Some textbooks will call it shadow, so we call it wick. They are very, very important because a candlestick with wick have a total different message with the candlestick with that wick. Okay, now the same principle applied. There was a time the market got to this level, got this low, but buyers pushed the market back and the market closed at this level. So there's always a fight between the buyers and the sellers in the market. It's a consistent fight. Okay, it's a consistent fight. That is why you see weak rejection, you see the candle moving up and down until it finally closes at a particular level. I believe you understand this concept. Okay, let me take it one more time. The candlestick open at this level and close at this level. If a candlestick close below where it opens, is a bearish candle, and the wicks represent the highest level of that particular candlestick on that time frame. It can be 1 minute, 5 minutes, 10 minutes, 1 hour, daily, monthly time frame. The highest point the candlestick got to, that is the high. The lowest point, that is the low. Now, let's look at the chart. Now, if you look at this chart, let's look at this first candle. Let's look at this first candle. Okay, now applying the same principle, let's apply the same principle to now the candlestick open at this level, the candlestick open at this level and did what? And close at this level. Close at this level. Of course, you should know the bearish are those that take the markets downward. If the market is going downward, that means the bears are in charge, the sellers are in charge. So bear, sellers, they are the same. Okay, now if the candlestick close below, that means below where it opened, that means the seller are the ones in charge of that particular candlestick, or they were in charge at that particular time frame. They were in charge. But that does not mean that because it closed bearish you should start selling, because there are other factors that can also reverse the market. As you can see, I don't want to talk about the bullish candle now, so we'll talk about that later, but let's understand the concept. It's the same concept, okay, but I just want us to take it gradually so that you can really understand what I'm saying. Now, the markets open at this first line and close at this level. Now, where the markets close from, that is where the next candlestick will open from. I believe you understand the concept. The markets, okay, let me remove this. Now, this market closed at this level. You can see where the next candle opened from. The same thing apply to this next one, and it keeps on going like that. Now we'll talk about indecision candle later, but let's stick to what we are doing now. Wherever the candlestick close from, that is where the next candlestick open from. And if the candlestick keep on closing below where it opens, the market keep going down in that frequency. It means that the sellers are the ones saying. Now if you check this particular candle, it closed above where it opens, but even at that, the market did not continue going up because there are levels that resisted the market from going up, and the market keep on coming down. We'll look at it when we talk about support and resistance. It got to this place, opened there, close at this level. Okay, now it close at this level, it opens here again. This next candlestick, it close at this level, it opens here, close at this level. This blue candlestick open at this level, close above where it opens. This next candlestick open at the same level where it's this previous one closed, and also close below. Now the market open here and close what below, and this is how the market will keep moving, keep moving. It close below, it keep on going down, it close above, it keep on going up. Sometimes you will see where the market will just maintain a particular level, like what you are seeing here. It just maintain a particular level. Now this is a consolidating market. We are going to look into this. See, the market just stick to this level, okay. So but I don't want to go into this now. I just want us to understand the concept behind the bearish candle. This is the concept behind the bearish candle. Okay, it closed below where it opens. That is the concept behind the bearish candle. I just hope it is understood. I know some of us may have actually gotten this knowledge, but I just want you to understand candlestick the way it is. Understanding the way it is, just get the principles, understand the principle. When you apply this principle, it helps your trading decision. It can change your trading career for life. Okay, so now this is the principle behind the bearish candle. The market closed below where it opens. The concept and the principle is very simple. Okay, now we're going to look at the bullish principle in the next session. Look at the bullish principle, then we'll look at how to put them together and how to use them in making trading decision. Okay, I'll see you at the next class. Thank you. Charge.